Hi, I'm Mark Farber. This is Fundamentals of Accounting. And today we're continuing on with our adjusting entries. We're going to look at supplies in this video. Supplies basically refers to, it can be office supplies such as pens and paper. It could be painting supplies, any sort of thing in which you are buying them often in bulk and then using them over a period of time. And again, thinking about accrual accounting, we don't want to necessarily expense them when we purchase them. If a painter purchases enough paint for an entire year, all in January, we want to expense it as it's used, not necessarily just when they purchase it. And so we've got a little scenario here set up to kind of demonstrate how we're going to work out exactly how much should be expensed in any given period. On January 1st, this particular company had $340 worth of supplies on hand. And I've done this over a year, but it could be over, again, any accounting period, month, quarter, whatever. So at the beginning of the year, they had $340 of supplies on hand. So they counted up all their pens and paper and determined there was $340 worth. During the year, they kept all their receipts and they added them up and found that they had purchased $4,600 worth of supplies throughout the year. And at the end of the year, they again went and counted it up, and they counted that there was $500 of stuff left over. So the question now is, well, how much did they actually use during the year? To do that, we do a fairly simple calculation called a flow, or what I like to call a flow calculation. And what we're going to do is we're going to start with the opening balance in our supplies account. So at the start of the period, we had $340, I'm going to just move that over a little bit, $340 worth of supplies. So $340. And then during the year, we had purchases. And we can either record one line for purchases, as we're doing here, or we could put in each purchase individually, whichever makes more sense. We'll put them all in here. So $4,600 worth of purchases. That means that over the course of the year, there was available for use $4,940 worth of supplies. So what was there initially, plus all the purchases, they could have used a total of $4,940 worth of supplies. Of course, we know that they didn't because there was some supplies left over when they counted. So there was an ending balance. And the ending balance, we're told, was $500. So the amount of supplies that were used in the year can be calculated fairly easily now. Supplies expense was the total amount of supplies that were available minus what was still there. The difference is what was used, and that's $4,440 worth of supplies. So now we can do our adjusting entry. Assuming that we've already made the entries for all the purchases, so every time that the company purchased supplies, it would have debited supplies to increase the amount of supplies and credited either cash or accounts payable as they paid for them. Now what we have to do is we want to record the supplies expense. How much of those supplies actually go onto the income statement as an expense? And to do so, we're going to debit supplies expense, $4,440, and we're going to credit supplies. In other words, every time we made a purchase, we debited, as I said, we debited supplies, we credited cash, or we credited accounts payable, so the supplies account kept growing and growing and growing, and now we're going to take out of that account, by crediting it, whatever we used during the course of the year, $4,440. And that's the entry that we make in order to record the supplies expense for, in this case, the year or for the period. Okay? Now, one quick thing to be very careful about here. Notice that we have an account called supplies expense, the amount of supplies that we use during the year, and we have an account called supplies over here, which is the supplies that are owned by the company. This account here, I'll just write it over here, is an asset account. It's the supplies that are owned by the company, available for use. This account over here, supplies expense, is, as the name implies, an expense. The supplies that have been used. Okay? So it's very important that when we talk about them that we're very explicit, whether we're talking about the supplies account or the supplies expense account. And for that reason, it's a good idea when we're talking about expenses to just add the word expense or EXP onto the end so that we're sure that we're differentiating one from the other. Okay, so that's how we keep track of or figure out the supplies expense for a period. What we're going to do in our next video is look at something very similar but a little bit different called depreciation and amortization.